1st, 2026. It is 2:31 p.m. This is the Chinchilla Pickin' Podcast. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. I like the and uplifting. I'm sorry. I
Yeah,
know I
yeah,
don't
yeah.
usually talk right here, but I like the and uplifting part.
So it still missed the date on this. I'm not going to edit this out. So if any listeners know what is happening here, please let us know so we can fix it.
It's cut off the first few seconds. I pause. I say useless words. It still doesn't matter. Oh well.
No matter what he says, it cuts it off, and I
Right.
don't get it. It did not do this for like 3 years. The first 3 years of us being on the air. I don't know.
That's crazy how many years we've done this.
I don't know.
Yeah,
I lost count.
I know, right? This is Brandon Beaver. If you don't know, I didn't do the introductions. The Baron of Bonds, Brandon Beaver. I'm David Underwood. Yeah, uplifted. Because it's very hard and troublesome sometimes when you're trading stocks or investing. You get down days, down times, down whatever in life. It's ups and downs in life in general or investing. There are always down parts. The uplifting part's always keep that positive outlook. Keep your long term goal and vision in focus, and be ready to how do I achieve that long term vision. And then we're gonna tell you how. We're gonna give you some good investment advice on the show, and we're gonna cover some topics. But yeah, now's our 1 minute of fluff. Brandon, 1 minute of fluff. What you got?
1 minute of fluff. The Warren Buffett annual shareholder letter was released yesterday, except for now not Warren Buffett anymore. It's Greg Abel.
Greg, yeah. And how do you feel? Honestly, how do you feel about it? Because I know you were a huge Warren Buffett fan, and you're a Berkshire Hathaway investor. How do you feel about him not being on there? Do you feel confident in the company? Not confident?
Yeah, I'm confident in it. I think it's a buying
Company. Did I
opportunity.
say coffee?
I mean,
Or am I just that tired?
for a cup of coffee, this stock has lost its Buffett premium, and I think it's a buying opportunity because I think that's just going to last for a cup of coffee.
A cup
I
of
think,
coffee. We're just gonna insert coffee and everything today.
yeah, I think that he's going to prove himself very, very worthy.
Good, good. Because that's always the challenge. Is a founder when they're with the company, they can run it and it runs smooth. It's whether or not a company's going to last is how the handoff goes, and do they find somebody that can hand off? I know Disney's had trouble lately with Bob Iger. I know I
Yeah,
keep
yeah,
bringing up
yeah.
Disney,
Well, here's
but
the greatness of Berkshire Hathaway. The greatness in Berkshire Hathaway is basically that it's just based on the investment principles of Berkshire Hathaway, Warren Buffett. And the performance of the company is largely reliant on the managers that are put into place. Most of them have been kept in place after Berkshire bought out the company. So as long as those managers are still doing really well, they'll be fine. And as long as Greg Abel just sticks to Warren Buffett's principles, this company will be fine for the long term. For another, Warren Buffett just finished up 60 years there. It'll be fine for another 60.
okay. All right. All right. So we're gonna get into it. I know if you're listening, you're wondering if we're gonna talk about the recent news and how that affects markets and investing. We're gonna cover the second half of the show. I'm gonna lead the conversation in that with a few different articles and how it directly affects investment wise. However, the first half of the show, Brandon has some great information that we're going to cover in regards to, I believe you said software companies. You listed a couple to me. And so I'm actually interested because I never heard, you said why software?
Yeah, well, it's mostly the problem is mostly in software right now, but it's private equity.
Ah, that's right. That's right.
And
Okay. All right. It's ringing a bell
yeah,
now. My bells are being rung. All right. So rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show for you. Brandon, take it away.
all right. So imagine you spent the last 5 years like renovating a house and you're ready to sell it, but the market has frozen. 2008 style collapse, maybe, or maybe, it's just frozen and it's sunk a little bit. And now nobody's buying, but your kid's tuition is due. You promised them that you'd have this cash, right? So what you would normally do, I mean, most people would wait it out. But with private equity, there's no waiting. They're doing something much riskier. They're actually taking out, metaphorically, a second mortgage on that unsold house just to pay for the tuition and pretending everything's fine. Um, here's where the issue is. So private equity companies, what they do, they buy a company, they fix it up, they sell it within 5 to 7 years, and then they sell it like an exit, right? They give cash back to their investors, like pension funds for teachers or firefighters and so on. Right now, because of high interest rates and because of artificial intelligence disruption, particularly in software sectors, insurance sectors, and healthcare sectors, nobody's buying. So these private equity firms are stuck holding on companies that they can't sell for a profit, right? Their solution is what is kind of worrying me, right? So, in order to get that cash flow back to investors, which is dried up and now it's at its lowest level in a decade, and these investors are saying, "Where's my money at?" What they're doing is they're using what is called synthetic liquidity. So essentially, they're manufacturing cash out of thin air. And there's two different ways that they're doing this.
Only the government can do that.
Right? So they're doing what are called net asset value loans. These are loans that are taking out based on the asset values that they have in their portfolios. And they're taking these loans out and they're using the loans to distribute the dividends to investors.
That's actually common, but it's just leveraging your assets, and that's what investment banks do all the time.
Here's the problem though. So with heightened interest rates still going on, and a lot of these loans are coming due between now and 2028, that's the issue is that their net asset value has dropped very, very much, like exponentially.
All right, so let me break it down this way. Let me ask you if this is correct. I I own a business. I say, Bob's Fish Market, and I own it for $100, right?
Right,
And my investors gave me that $100, and now I need to pay them dividends. So I
right,
go ahead and I take out a 50%. That's typical 50% loan on the collateral of Bob's Fish Market, the what I own on it as collateral. So I pay out that $50 in dividends or ownership to my investors for now to keep them at ease. Well, now on that loan I took out of $50, they want to start making payments, whether it's 5, $10, what have you. However, Bob's Fish Market's only worth $60 now. So the original asset I took the loans out against dropped in value. So now it may be a margin call on my loan, meaning they want it all, and I don't have it all. In fact, I'm down money that I invested on Bob's Fish Market because it's not doing well. So I'm actually down 40% on the fish market, and I gave out that part of that loan. So I don't have that money sitting in there to pay him back either. Is that
right.
kind of what you're describing?
Exactly, exactly. Now, the other form of synthetic liquidity is called continuation funds. And this basically, okay, so you've got two different companies, right? So you sell one asset from one company to the other company that you also own. And then you present that as, hey, look, I made a profit to my investors.
That's not a profit.
I know, right? So why should we care? Well, here's the reason. The IMF just estimated that 40% of private equity companies now are not making enough money to cover their own bills. They are free cash flow negative.
So
For
40% of private equity don't have enough cash, don't have enough profit
right,
or revenue coming in to cover just their operating expenses.
right. And between now and 2028, a huge wave of this debt is coming due. If the interest rates stay high and artificial intelligence continues to beat down the software sector in particular, it's going to be a big issue. And
You said 2028, so they got 2 more years to fix this before a majority of these loans
right.
come due.
So we either need to lower interest rates, which, well, we just had a hot inflation report. Don't know if that's happening, or the software companies need to prove that they're stable and that they can manage the artificial intelligence issues.
Are any of these household names of software companies or private equity firms? I'm
Let me
assuming
get to
it's
that.
not BlackRock.
That's coming later. They're part of this, and so is Apollo, and so is
Oh, really?
KKR, so is Goldman Sachs, and so is JP Morgan.
Yeah, I'm
You
sure
know,
the big ones will survive just
they'll
fine.
be fine, right? But here's the problem. Okay, so unlike 2008, a majority of the risk is now held in pension funds. So teachers, firefighters, and so on. And now, if those drop 10 to 20% and the pension funds start, not investing in the rest of the economy, then all of a sudden the GDP of the country is going to be held back. Now, a lot of
Held
people
back.
are
Okay.
saying a lot of people are saying that this is not going to be a 2008 style crisis. A lot of analysts are saying this is going to be a slow burn and drag on GDP over time.
Yeah, because private
But
equity is not as big as the market as the housing market is.
right,
They're not the same. It
right,
is more localized in the investment bank or private equity sector of the economy.
right.
But it does, like you said, it can spread and affect other areas. It will not downfall a pension fund, but it will affect the pension fund to where they're going to
Right.
have to be creative.
So, I mean, I've read articles where people are saying this isn't a banking crisis. The banks aren't tied to this, but who's giving out the net asset value loans? It's J.P.
Right.
Morgan and Goldman Sachs. So, yes, if those default, the banking sector is affected for sure.
Just losses, but like we run these tests on them ever since 2008. Every so many years they have to show there's so many new banking rules ever
Right.
since then. I mean, we've relaxed a few of them, but the biggest ones and the ones that require cash on hand and stress tests passing are still in place. They still have to go through a government stress test and have X amount of cash on hand,
Sure.
depending on the style of bank that they
Yeah.
are.
So, I mean, as long as, they're honest in those reportings, and I think they have to be. At least the big ones have to be, right? I mean, if they're not, that's going to be a huge issue for them as well.
Right.
The scariest part of this is in software, though. So for years, everyone loved investing in software because users pay every month, right? So it's kind of like a guaranteed income. Nearly half of all software loans are coming due in the next 4 years. And because software values have dropped, these companies can't refinance. So instead, they're using what are called payment in kind interest payments. So instead of paying their interest, they're just adding it to the depth of the current loan. And this is what I want you to look for in these business development companies and private equity companies.
Yeah.
Do not invest in a company that has 10% or more of its net income and payment in kind, PIK. Do not. And in fact, a lot of these business development companies, they have to pay out 90% of their profits in dividends. A lot of them are regulated to do so. So if you've got a company that's got, they're paying out 90% of their profits in dividends and 16% of their net income is payment in kind, they're cash flow negative. They're a short target. And
Yeah.
you could go in, and I've been doing this every day for the past week looking. You can go into Gemini or your artificial intelligence chatbot and say, "Hey, run a screen for business development companies with payment in kind, 16 or it's 10% or more of their net income," and then there you got your short candidates.
And do you have a list of those? What are some names?
I,
Let's name a couple.
oh yes, I do, but I don't have it on me right now, Dave.
Ah,
So
I would
here's what
love
I'll
to
do.
name a
I'll put it
couple.
in. I'll put it in my final comments for today. My final thoughts. So
Yeah,
when we
while
go to
I'm
what you're
talking, since you
talking,
know what I'm going to talk about, while I'm talking, run the prompt.
right. I will. So yeah, think of payment in kind like I owe you $100 in interest today, but I don't have it, so I'll tell you just add $100 to my total debt, then I'll pay you later. That's what it is, and this is a snowball of debt that's literally getting bigger every day, with higher interest rates making it harder to sell these companies and artificial intelligence chipping away at software. Um, Now the leaders. Oh, I do have it. I did put it in my notes. The
Nice.
leaders in this fake income um, Prospect Capital, PSEC is one. Mid Cap Financial, MFIC. They just saw a 47% jump in PIK income, by the way.
Who,
Huge,
FIC?
huge red flag. Uh,
FIC, you said?
Yes. Goldman Sachs BDC is flashing warning signs now. And that's their business development sector for Goldman Sachs. Blue Owl is another one. That stock's recently crashed, and so is PSEC. So maybe you kind of wait on those to see if they come back up, and then you can short them again.
But
Definitely do not
FIC,
buy them.
I might short that one. Let me see.
Yeah. Now, FSKKR Capital, they're offering a 19% dividend. I expect that to be completely cut. They're not going to be able to sustain a 19% dividend. 27% of their portfolio is payment in kind. So
I don't have a
that's also
FIC.
really hard. You don't have it?
No, what's that last one you said? The
K,
19% dividend?
it is FSK is the ticker symbol for,
FSK?
yes.
All right. That one's on here.
Other firms like Blackstone, BXSL, New Mountain Finance, Triple Point, they're all showing high concentration
Oh,
of preferred.
FSK dropped on Friday
Really?
a
I
lot
mean, they probably just
last
reported
week.
this then.
Yeah.
So when professional investors are kind of seeing these high PIK levels, they're starting to short these stocks and they're betting that they're going to crash, and they're usually right. So why is this hitting software so hard, Dave? I want to explain this real quick. High interest rates, artificial intelligence. So these software companies, right? How did they get paid subscription wise? For more than a decade now, it's been per user. The pricing model was the gold standard of software as a service growth. AI is now threatening this because if an AI agent can perform the same work that 3 junior analysts would perform, the company only needs 1 software license instead of 3.
Yeah.
So the payment per seat thing, even Microsoft Office is going to be a victim of this because companies pay per user.
Yes.
On top of that, these companies are now having to focus a lot of their investment strategies into investing into artificial intelligence rather than investing in software. So it's kind of taken out these investment moats that the software companies had. One of the primary reasons that software stocks traded at such high multiples was their moat. The difficulty of switching to another competitor. AI is eroding those moats. AI-powered coding tools are making it significantly easier for companies to migrate this data from one platform to another, or to even build a custom in-house version of a third-party tool rather than using an app that Microsoft
Here's my question with AI and with a little bit of knowledge. People out there can be doing what you and I do and just invest on your own. Why do we need investment companies then, other than to create ETS for us to buy and sell,
I don't
or to
know.
manage a 401k or a pension fund that because like if any job I've had, I do the 401k because they match it, and I take the free money. And then when I've left that company, I just blow that money as like my fund because my retirement fund I run on my own. I don't even count on a 401k or anything or a pension, but they're just there because we get money from them. But like, what's the point
Right.
of these investment banks anymore if we don't have that other than that bank for us to run payments through? And with like Mark has always said, Ripple is eventually, if they ever get their act together, going to replace that, and we could just all use the Ripple blockchain to run payments through back and forth.
You don't need them. And Dave, I've been asking the same question since before I was born and Benjamin Graham was writing books. I mean, because if I could read how they're doing it myself and how to do it better than them, what do I need them for? I asked the question, I think that like the first or second show of this podcast, 5, 6 years ago, whatever, however long ago that's been, I've been saying,
Years.
look, you get 10% for most of these investment banks year over year over year. The S&P 500 had been doing 12 to 15% and beating most of them by far. Me and you beat that every year
Every
constantly.
year.
A blind monkey picking good companies could beat them. I just really I never have used an investment bank. I've never used a professional whatsoever. I don't care what they have to say. They contact me on LinkedIn all the time. They drive me nuts, and I just usually ignore them or make fun of them.
Yeah. There's
I'm
no.
not trying to make somebody's life or their job worse, but it's just
I
come
mean, with
on.
AI, like you said, like you've proven on this show over and over again, you can use AI to run these research algorithms and software scans for you.
Right.
To where, I mean, before in the past, I had to have all these subscriptions, everything, the Wall Street Journal, E Trade, this, I had to pay for a Reuters Newswire subscription and all this other stuff. You don't have to pay for a lot of this stuff nowadays, but you did back then. And then I have to go and search.
Yeah.
Now I can just be
There's a
like
lot of
AI.
research.
That'll be AI,
I
run a
mean,
prompt for this, and boom, it searches for me. And then,
it would take me and first of all, it takes me forever to make a decision with financials. But the fact of the matter is it would take me like a whole weekend just to research one company in the past
yeah,
to see if I should buy it on Monday. It would be Saturday and Sunday for one company. Now
yeah,
it takes me 20 minutes, if that.
yeah. Because you
And
have
it's
you have all
reading.
your stuff that you look for narrowed down. You just input it in
Right.
AI and it runs a scan for you. Yeah. So, anyways, so these private equity firms, they're not looking so hot. They're looking like they may fall off.
Right.
Um,
Right.
are we getting to a point where you're ready to tell us some names, start naming some, and besides the ones
Yeah.
you've already named, and tell
Yeah.
us what you think we should do with this information now that we have it. Okay, we have
So
this information. What do we do with it?
So I just named the private equity firms. I think shorting those would be the best deal, or at least just staying away from them. The other thing that I want to do is I want to flash the red flag here because companies like Adobe keep appearing on my valuation scans that I have, and I think that there's a very high risk that a lot of these companies like Adobe become value traps for a lot of people that are looking at the low valuations and just say, "Hey, Adobe's a household name. Everybody's got this on their computer. Let me just buy the stock because it's valuable right now." And maybe over the course of 10 years, Adobe will dig themselves out of this, but I mean, they're being suppressed by AI native competitors like Midjourney and Canva, as well as video generation tools. And they have integrated Firefly, which is their homemade artificial intelligence into the suite. But I'm very skeptical that it can maintain its premium pricing power because they also do the headcount thing.
Yeah,
Other companies
and
that
I'm going to interrupt you here really quick. Sorry to do this. I apologize. I hate doing this to you
you're
because
fine.
you're when you're in the middle of a thought, you got it. But like the value trap is a huge thing. But those of us who are retail traders and were retail traders back pre 2008, where we started before it happened and we retail traded through it, we have scars from Lehman Brothers, from Citigroup. You may think, well, Citigroup's around today, Dave. Yeah, that's a whole different company. Citigroup pre 2008 traded under a different ticker symbol, and then they came back out with a new Citigroup, whole different stock ticker. So if you owned the previous one before, you lost all your money, and then they came out with a new one and said, here's our new company. And it was just the biggest value trap of the old one, and then the Lehman Brothers mess. There was a whole bunch of us who remember that are scarred by that. That we're just like,
Yeah,
could be good. That could disappear. Some people were like, well, stuff don't look. Where's Sears?
yeah.
Where's Lehman
Where's
Brothers?
Sears?
Where's
Where's yeah,
Merrill? I could
right.
start naming off all these huge companies that were around for over 100 years. That you could say, well, that's never going to go anywhere. Yeah, don't say that. They could. They could
Yeah.
all be gone next year.
Funny you say that. I've got a 1908 original Sears catalog where they used to sell houses in my
Yeah.
cabinet over there. It's really cool. It's sweet to look through. Workday, they're a bellwether for corporate headcount. And oh, by the way, private equity crisis and high interest rates has slowed M&A activity, which usually drives new Workday implementations. That's gone too right now. I think that's probably temporary, so that'll pick back up in the future. But they got a lot going against them right now. So does Salesforce, Oracle, and even Microsoft. By the way, Microsoft, I'm not calling this a sell right now. I think this is the buy of the group that's been hit really
Really.
hard. Yeah, because they're on the AI deal. They got the AI capex for Microsoft
Yep.
right now. In my opinion, is actually a good thing.
Okay.
Um, because they can use that to battle back against the declining revenue and Microsoft outlook that may happen
Gotcha.
as a result. I really think a lot of these software companies, especially the ones that go corporate headcount, are going to go the way of linear TV. A lot of these companies have a lot of good cash flow right now and are still very, very profitable, but a lot of linear TV companies are still profitable. which is why Disney still sticks to holding ABC and never sold it, because they've got a lot of cash flow that's coming from companies like ABC or their sectors or whatever you want to call it. But it's declining rapidly. And
Yeah.
the same thing for software now. It's hit them very fast, very quick. And it's funny because the Palo Alto CEO on the conference call last week actually came out and said the AI hype is overdriven and it's not really going to affect us. And then, like, literally 2 sentences later, he lowered his forecast for the year. Like, come on,
Happens.
dude. Come on. You're not being honest.
Yeah. So it's yeah. But I mean, they mainly do cybersecurity, which is what I'm going to talk
They
about later
do,
on.
but yeah, but cybersecurity is getting hit hard by this too.
Because the
So, I mean,
AI can do more
artificial,
of it. Is that what you're
right,
saying?
exactly.
Yeah.
Anthropic, that's really eating into Palo Alto. I mean, there's a lot of controversy over the Department of Defense and Anthropic this week, but yeah,
Can't
they're
let
taking.
AI take care of all of our cybersecurity and security and do contracts of our military because they'll talk to each other and then boom, next thing you know,
I know,
Skynet.
right?
If you don't know Skynet, Google it.
Yeah, yeah, and well, look, even Microsoft, they're not immune in 2026. They were facing pressures. I mean, the stocks dropped as investors were demanding more proof that the massive AI capex and is actually translating into profit. But you know, I think that they'll be fine. I think that AI capex will translate into profit for Microsoft. I think that's the one that is a buy here. It's interesting if you
Okay.
look at some of these business development companies, they're declaring the net asset value, which they can declare. It's not a mark to mark thing where, in the stock market declares the value of a current company that you're buying or of a ticker symbol or whatever. These companies actually declare their own net asset value. And the auditing that is
That
done from
seems
any
fair.
third, yeah, well, the
They're not going to
auditing,
ever lie on that.
right, it's very, so you have some companies that are declaring net asset value of like $6 7 and then their stocks trading at like two, and so you could see that the market is clearly calling bullcrap.
Yeah. Yeah. All right. Well, I appreciate that you had some calls. You had some a lot of sells. You had a lot of watch out. Appreciate that because sometimes you present information without that, and today you came with the full bags. You covered it all. You explained it in detail, and you gave us some buys and sells.
Yes,
Appreciate it. Thank you,
no
Brandon.
problem. I recently just bought more Microsoft, and I also, like, this could actually be a macroeconomic drag on the economy, but I still bought Visa this week too.
There you go. Look
Yeah.
at that, Brandon with the calls. All right, we're gonna transition into the news of the weekend, and this is where I'm gonna kind of lead the discussion, if you will. We're gonna try to keep it centered, if we can, on investments. This is an investment and stock analysis show, but yeah, this I mean, what I'm talking about is what happened in the Middle East this past weekend with the U.S. and Israel strikes on Iran. And okay, what do I do with this news from an investment standpoint, right? That's where our focus is right now. We're not going to go into the political ifs and what and all that. Investment standpoint, what have you. I got three articles for you that I want to cover that really paint the full picture, if you will, about from an investment standpoint, what's going to happen here. First article, all three just came out today. Of course, latest news come out today. Boom. First one reads Hapag Lloyd introduces war risk surcharge for Gulf cargo due to Middle East disruption. So this one came out at 12:39 p.m. Eastern time today. It said German shipping group Hapag Lloyd is introducing a war risk surcharge for cargo to and from the Upper Gulf, Arabian Gulf, and Persian Gulf from March 2nd until further notice due to the dynamic situation around the Strait of Hormuz. The charge is going to be $1,500 per TEU for standard containers and $3,500 per container additional for reefer containers and special equipment containers. This is the statement they released on Sunday. They are not the only ones doing this, Brandon. So what that means is there's going to be a temporary surcharge on all the shipping that's going to be coming through or around that. So think Persian Gulf, Strait of Hormuz, yes, but also the area that comes up through and out the Sinai Peninsula. So things go into Europe from Asia or from Europe to Asia. Those are also going to be hit right there in the Sinai Peninsula coming through. Um, Brandon, initial thoughts on what that could do to maybe the European or Asian economies here, or if it's going to have very little effect because we think it's only going to last a few days. First thoughts?
I don't know. It's definitely going to make transportation more expensive.
So that cost is going to
So,
get passed down to the consumer, you would
right.
think, right?
Yeah,
Or
absolutely.
or are
Yeah,
companies just going to eat this cost?
right.
I mean, IKEA, is IKEA going to eat this cost?
They're going to
That
have
would
to.
be one who ships a lot through there.
I mean, with consumers facing inflationary pressures that they are here in the United States and across Europe right now, a lot of these companies are going to have to eat it.
So yeah, and that's
But
what I'm thinking
but
too. So that
margins
means
are
that
already compressed.
so that's what I think is, and these companies are just going to have a they're going to eat this cost, and they're going to have when it come Q2, this might be something that we hear in what am I trying to say? Earnings calls. On the earnings call, we're going to hear people reference back to this event and say, "Hey, we had to have an uptick in costs and write downs, one-time write downs due
Right.
to this shipping." Is what they're going to be. Is what I
Right.
feel like we're going to hear.
Right.
All right, so that's one part of it, shipping costs, just general shipping it all together, right? One part of the puzzle, picture I'm painting for you guys here. Second part is the right now you're seeing. Here's the headline. It says safe haven Japanese yen and Swiss franc gain after weakened Iran strikes. Right, so this came out just 45 minutes before we started this podcast. That's when this was released. And the article reads Safe haven, Swiss franc, and Japanese yen strengthened while the euro slid
Uh,
as currency trading resumed after a weekend that saw the United States and Israel launch the attacks. Yada, yada. All right, let's get into it here. The euro dropped
right.
0.34. Go ahead.
No, I'm laughing, and there, I don't know if there's any listeners that ever pay attention to money or currency or whatever, but I cannot believe in 2026 I'm living in a time where the yen is a safe haven. It's
I
just
know, right?
blows my mind.
Because I first started paying attention to stock markets and foreign exchanges back in the 90s. That's when I first started watching and paying attention. And yeah, yen. What? What? But anyways, here we are, 2026, Brandon. Yen, Japanese yen. But yeah, the euro dropped to 1.176, 1776, compared with around $1.18 in New York on Friday. It also fell 0.5% to the Swiss franc, and to its lowest level since 2015, by the way, to the Swiss franc. So the dollar slid to the yen, though the greenback has strengthened on the sterling and the Australian dollar. So they're seeing some strength in the U.S. compared to some currencies, but sliding against the yen and the franc. As I continue reading through here, the reaction to energy markets, it's going to be a major one. We're going to get into that in a minute. Bonds and currencies trade in response to our bonds and currencies trading in response to development in Iran. We're going to see some movement on these on Monday morning and throughout the week. But as far as forex or currencies, this is where we're currently at right now. The looks like the big winners are the Japanese yen and the Swiss franc.
I'm surprised
So,
the dollar sliding. I really expected the dollar to increase on this, and then I also
well,
was expecting at the time that treasuries would go up in value. But if the dollar's sliding, then the treasuries might not.
hold on. Remember, the dollar sliding against certain currencies and going higher against
Yeah.
others.
Okay.
So it's a mixed bag with the dollar.
Right. Okay.
But the clear winners, the ones who are going up against everybody, are Japanese yen and Swiss franc,
Gotcha.
because the Swiss is always neutral.
Okay.
All right.
Yeah.
So let's
I just got that. Okay.
um so the last article, and of course the most obvious one, is oil. So this one came out 10:19 a.m. Eastern time today, and the headline reads oil jumps 10% on Iran conflict and could spike to $100 a barrel, analyst says. So let's get into it. This one is the longest. This one we got the most to talk about, but I'm going to try to keep it short and sweet to the point as best I can. Brent Crude jumped 10% to about $80 a barrel over the counter on Sunday. Oil traders have said that they predict prices could climb as high as $100 a barrel after the strikes happen. Now, like Brandon had pointed out, this is not due to the actual strikes themselves, but rather due to the fact that the Strait of Hormuz is shut down because of all the strikes and the tensions in the area. And it's shut down over a safety precaution, not necessarily because they can't keep it safe. They can. It's more of being cautioned so we don't have tankers blowing up all over the ocean there, which is actually a pretty smart move. The problem with that is more than 20% of all global oil moves through that strait. So with more than 20% of all global oil unable to move, that is what's going to cause the price of oil to spike. So OPEC Plus group of oil producers agreed on Sunday, that's today, to raise their output by 206 barrels per day from April. A modest increase representing less than 0.2% of global demand, so not much help there. Some alternate infrastructure could be used to bypass the Strait of Hormuz. The net impact from its closure would be a loss of 8 million to 10 million barrels per day of crude supply, even after diverting some flows through Saudi Arabia's East-West pipeline and Abu Dhabi's pipeline, said
Wow.
Rystad Energy. So even after you divert, we're still losing 8 to 10 million barrels per day. Rystad Energy, the one who just made that comment about the pipelines, they expect prices to rise to above $92 a barrel when trade-in opens Monday morning. So there's a lot going on there in regards to oil, and it's more of a supply issue, not so much of okay, the U.S. had an oil producing country. No, they expect oil will still be flowing, but they just can't get it out. Is the problem
Right.
now from an investment standpoint? I've covered, shipping containers of companies shipping from Asia to Europe, Europe to Asia. We've covered foreign exchanges. We covered oil. What does this mean? What can I do, David? How can I make some money or not make money? Or what can I do on investments from all this news we've covered? So from my standpoint, if oil jumps up above $90 a barrel, $100 a barrel, my thing is I'm going to go ahead and short. And the reason is it's not going to stay up. Hormuz is going to get opened. Oil is going to flow. The cost per barrel is going to come back down. I am shorting like nothing, Brandon. I am leveraging this to my max, and I I would say I would put a large portion of my portfolio, 50% or more of my portfolio, in the short in oil if it jumps over $100 a barrel Monday morning.
Okay. Okay.
And if I'm right and I double off the short, then I'm ecstatic.
Now, are you also betting on this not being a long, drawn out conflict with that, and that
Yes.
maybe Iran opens up and then we actually get the oil out of Iran and
And
then oil
we
drops?
don't necessarily need the oil out of Iran because it's sanctioned. We don't count it. It's not
I know.
counted as the flow.
Well,
If they
I mean,
sneak
but
it, they
adding it,
sneak it out. They sneak
yeah,
it out under cover, say this is a container of goods. It's not a container of oil. So
right.
it's not being counted in the global supply. So we are only talking about the oil that is counted. And once the Strait of Hormuz gets opened back up in whether a week, 2 weeks, it doesn't matter if it's 3 or 4 weeks. My short is not a 2 week put. My short is a short on companies that I can hold as long as I need to hold, which I believe will happen.
Okay.
That's what I'm doing. If I could directly short oil, the commodity in some way, short form without doing a put option, let me know,
Okay.
and I will do that because that is something I would 100% do. But usually you got to go through stock, you got to go through companies, you know.
I think one thing that we might be missing here, I'm not sure that we're actually aiming for regime change in Iran.
No, the current administration has gone on record over the weekends, and they're not concerned with who takes over. That's not what the point of this
Right.
was.
Right.
They're not trying to say they favor this person or that person. They're actually taking no sides. This is the first time in decades that we've done this to a country and not taken a side. We are taking no sides according to this is just what they publicly said over the weekend The current administration has said that's up for the people of Iran to decide. They don't care. They just wanted
Yeah.
to uh, remove the current what they claimed was aggressive force and remove the threat now
Yeah.
and then let them Iran people handle Iran.
No, Ayatollah is a figurehead, but he had a lot of political power and a lot of say, but he's a figurehead. The president of Iran
So
is the head of the regime, I think.
again, bringing it back to investment and stock
Right.
analysis.
Well,
uh,
that's what I'm saying. Like, if they can get that regime to kind of bend the knee and then bend their will to what the U.S. is wanting, then maybe we do get their oil, and maybe it does get counted.
well, I
I don't
mean,
know.
if
I
if
don't
it
know.
does, it's just going to be an extra supply to the market, which will drive the cost even down even more.
Right.
So it even
Exactly.
backs my play. It backs my play even more, and
Right.
so I make money either way. It
Sure.
does. It doesn't matter. It just helps me if it does.
Right.
So I'm not too concerned. That's my play on it. That's where I'm thinking to make the most money off of this. Yeah, I do believe on some earnings calls, you can see some companies bring up, hey, we lost money because we had the shipping issue in March and we couldn't get things through, or we had to pay extra for shipping during that time and it affected our bottom line.
Yep.
So, all right, Brandon, earnings, you ready?
Yep.
Monday morning. I wrote here, don't, I know why I wrote this, but it was plug power. So, you know what plug power does?
Yeah. We talked about it on this podcast before. I think you brought them up.
Yeah, I have. I've covered them many, many, many times before, and it's natural gas. I believe it's natural gas, right? It's hydrogen. I keep forgetting. This is where my brain is. I'm getting too old to be doing this, Brandon.
Did you
Um,
try unplugging it and
did
plugging it
I
back?
try unplugging it? Yes, I did. Yes. All right. So what it is? All right. So yes, it's production, liquefaction, storage, and power generation of hydrogen. That's it. Hydrogen power generation, liquefying as a power source using hydrogen as power source. It was a big thing, took off at one point, but then it went nowhere. So they had some scandals recently as far as loan funds and misleading investors on these loan funds. Everybody's looking for a negative quarter out of this company. At one point, they were the darling. They were over almost $100 a share. The last time I saw them, they were trading around $7, $8 a share. That's a huge drop off, and it's because of just mismanagement, lying to investors. I want to see what they have to say. I don't even know how. They're working at a loss. I don't know how they're going. Riot platforms again. I'm interested what that Riot has to do with Bitcoin as a Bitcoin miner. I wonder what they have to say about the future of Bitcoin. I've been a bear on Bitcoin for the past. This is my third session in a row, Brandon. I'm a bear on Bitcoin, and not on cryptocurrency. I've made that clear. There's a difference. It's just the way that Bitcoin is headed, and versus the other cryptocurrencies.
You're
Um,
still holding for the long term, though, right?
I am holding for the long term. I'm still holding my Bitcoin, but I may if it goes above 100, I might just sell again. I might just sell.
Okay.
Sorry. If it goes over 100 again, I will sell all my Bitcoin and get out of Bitcoin altogether.
Okay.
Um, yes, Tuesday. Tuesday we have Best Buy and Target, two different things. You would think that would be the same thing here. Best Buy, I'm looking for consumer strength, what they have to say. Discretion is it discretionary income play? Do people have discretionary income, or are they doing like payments plans and all that kind of stuff? Where's this money come from? Where's the advertiser? The Target, they have been on a slide for the past few years. They have not gotten anything right. They have not gotten any single message right out of Target in a while. I want to see if this is a continued slide or they turn things around. They have one good quarter here, then they're bad quarters. Then one good quarter here, then bad quarters. Are they going to put back to back quarters? Are they sliding it? What's going on? Or is it a continued slide? Is this going to run? Is this going to be a future Sears and disappear?
They've lost a
Um,
lot of market share to Walmart because
they're
of cost pressures on
yeah.
consumers.
Now they're still profitable,
By
but
1%, 2%, something like that. I haven't looked
they're
at it in a while,
sliding
but
though. They're slide.
yeah.
You can't continue to slide quarter after quarter and stay profitable. Eventually, you're going to be working at a loss.
The problem for them in retail is how do they expand that net profit margin that was shrinking for so long, but then get the market share back that they lost?
Yeah,
Is it
exactly.
possible?
I love the way you just explained that. That was perfect. The next one here on Tuesday was CrowdStrike. So I want to call on here is we called this on the we said it was going to rise up and explode, and it did. But we said that the week before they had that huge issue almost 2 years ago. And then the week we did that podcast, Brandon, we released that, and then they had this huge meltdown issue of a CrowdStrike software programmer let something go, and it blue screened of death all these computers around the world. So, but then after they fixed that, they did do exactly what we said they did. I want to see what they have to say now in regards to AI, in regards to their future. Are they going to continue this growth in cybersecurity, or is AI, like you said, going to take over? Wednesday, we had Broadcom. Is there continued growth, or are they going to slide just same as NVIDIA? And what did they have to say about the NVIDIA slide versus them? You said it was price to perfection. Is Broadcom price to perfection?
I think it was. I think Nvidia was, but I also think that they easily grow into that. I mean, it was still a massive earnings beat. That Nvidia still had an incredible. I think it was a mistake that it was down. Honestly, I was surprised that it was down. I just think that's overall market sentiment that will, over the course of the next couple of months, correct itself. And anybody who's in Nvidia now or buys into Nvidia now will be happy.
There you go.
Yep.
Webull is another one that's coming out on Wednesday. Here's the thing: after the rise of Hood, and everything that Robinhood had been doing, and that stock just jumped right up out of nowhere. Is Webull next? Is my question, because Webull has followed Hood every step of the way. They've basically just copied Robinhood. Every time Robinhood releases something, Webull releases it a few months later. Is Webull stock next the same as Robinhood stock? Let's see what the earnings have to say. I'm just putting it on my radar.
Yeah.
So I want
maybe.
everybody else to put on their radar. Something to watch. And then Thursday, I have on here Kroger and Costco. I can't talk today. Kroger and Costco on Thursday. I've always said that the only two I would ever be interested in on retailers invested in would be Walmart or Costco. I stick to that. I still don't know about Costco. They've paused, but they were doing great dividends. They had great moves in the market. They were moving up. The stock was jumping up, skyrocket. It was great. You couldn't lose with Costco, and then they just paused. And I want to see, are they going to break this pause and continue the rise, or are they, fairly valued now?
Right. Okay.
So, all right, Brandon, final thought. Take it away.
Warren Buffett's, like I mentioned earlier, the annual shareholder letter came out, this time written by Greg Abel, new CEO. Let me share my screen here real quick.
Here we go. The danger of Brandon sharing screens. He can never
no,
get this
I got
right.
it this time.
Let me watch it on YouTube. I'm sorry.
Okay.
I apologize for whatever pops up on his screen. I do not condone anything, whatever he says.
There we go.
It is Brandon's screen, not my screen. Okay.
Are you seeing here? Are you seeing what I'm seeing?
I am. Yes.
So for those who aren't watching on YouTube, this is the top holdings of Berkshire Hathaway, Apple, American Express, the Coca-Cola Company, Moody's Corporation. Here was their cost basis when they originally bought it. Now this is in millions. So you see, originally they spent $6,255,000,000 on Apple. It is now worth $61,962,000,000. Coca-Cola Company bought way back in the 80s, $1.29 billion, now worth $27,964,000,000. I found this very eye-popping and interesting and not surprising whatsoever. But this just shows why consistently over the course of the past 60 years, this company has beat the S&P 500 at times handily. I think in the last year, they did not beat the S&P 500. I think that's investors making the mistake of not buying because Warren Buffett was retiring. I think this continues. So Berkshire.
I mean, look at that 2025 dividends of those four companies. Just four companies, 1.6 billion in dividends from four companies.
Yes.
That's crazy.
I know.
That's crazy. That's a 10% dividend. I mean, that's above 10% dividend. Look at that, Brandon.
Right.
Cost basis, based off their cost basis, that's above a 10% dividend.
Unbelievable.
Was that 14% dividend there? Outrageous.
Right. Give me a piece.
That's a return. That's most people's yearly return. They just got in dividends. Forget returns on equity. They just got that in dividends.
Yep.
Wow.
Warren Buffett was,
That's like my dividend sheet.
yeah,
Oh,
it
yeah.
is.
Drop it.
Warren Buffett is a genius. And again, Greg Abel, if he's 90%, 80%, 75% even of what Warren Buffett was, this company is going to be fine.
Yeah. All
So,
right. While Brandon tries to figure out how to unshare his screen, I'm going to give you my final thought. My final thought is as we look into this week, let's keep an eye on oil and oil related stocks. I'm definitely looking for some way to short these if it jumps up above $100 a barrel. That is my if. Keep that in mind. This is all time related. It is March the 1st. It's currently 3:34 p.m. If oil jumps up above that, um, that's what I'm looking to find some way to go ahead and short this sector, if you will, of the economy. One way you could do it is maybe look at, Exxon Mobil's, APA, Chevron's, maybe. It depends on if they move or not. They're currently up a lot anyways going in to the weekend. I mean, the 1 day chart on Exxon Mobil was up what was this? 3% on Friday, based off a possibility of this news coming in. A lot of people got wind of it earlier on in the day, and the markets were still open. So I'm looking for moves in the market, some way maybe to short the oil market if it jumps up that much, because it won't stay up that much for long term. And by long term, you may have to hold for a month, month and a half to get your return, but you will get your return. So, because the oil will flow, the Strait of Hormuz will be opened back up, and these extra costing containers will eventually drop off. They won't hold them forever. So, none of these things are going to be permanent. They're all just temporary. So, it's a chance to make money off of them. That's what I'm looking at. I can't hear you, Brandon. And that's probably a good thing. So, I could go ahead and end the show without Brandon saying his response. So, as always, we thank you for listening. Hit that subscribe button. Thank you for being a great listener. DM us anytime with any questions. Oh, I hear Brandon.
yeah, look, the war in Iran's got nothing to do with the valuation of Nvidia or Apple. So if there's continued drops in the Nasdaq over this on good companies, it's a buy.
There is exactly. Another great example. All right. So as always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.